Guys, I hope you are doing great. Okay, today we'd like to learn the foundations of accounting, right? So there is what is called the accounting equation. Accounting equation. This is the foundation of accounting, right? So it goes like this. Assets equal liabilities plus equity, right? And this must always balance. Assets equal liabilities plus equity. This must always balance, right? So now let us break this into smaller chunks so that we could be able to understand each part, such that when we are using this formula in accounting, it becomes easier for us to understand what we're doing. So let's start by understanding assets. What do you mean when you say assets? A lot of businesses have got assets, right? And we should be able also to identify these assets. So as a business owner, you must know your assets. What are assets? Assets refers to what business owns and controls, right? Why I added control? Because most of the people, they think employees. If you're a business owner, you might think employees are your assets. Let me clarify. Employees are not your assets, because they can leave your business, they can retire, they can resign. You cannot control them, right? It's difficult. So are not assets. So assets are what business owns and controls, right? So we're referring to things with value, right, that the business uses to operate. So now we can talk of cash, either in the bank or the petty cash that you have. We can talk of, like I mentioned, bank balance. We can talk of tools or equipments. We can talk of vehicles. We can talk of a lot of things like furniture, like laptops, etc. Right? Those have value and they enable the business to operate. So basically, these are the assets, and this is what we're referring to as assets, because they have value. Of course, we're going to be discussing the value depreciation, right? These assets, as time goes by, their value depreciates, and we're going to learn as well, right? Now we're done with assets, right? Remember our formula: assets equal to liabilities plus equity. Now we're looking at liabilities. So what do you mean when you say liabilities? Liabilities simply means what the business owes others. Liabilities simply means what business owes others, right? So we can talk of the debts, we can talk of obligations like rent, loans, taxes, salaries, right? Suppliers, etc. Right? What a business owes us. That's what we refer to as liabilities. Right? Then lastly, we have to look at equity. This refers to the owner's share or net worth in the business. Right? This is what's left if the business sold all assets, right? So this is what we call equity, right? So we can talk of debit, we can talk of credit, we can talk of receivables, etc. Right? So basically that's the formula for us: assets equal to liabilities plus equity Assets are referring to what the business owns and controls, and liabilities are referring to what business owes others. Then equity are referring to the owner's share or net worth in the business. We're going to learn more deeply into this, but basically that's the foundation of accounting, and this must always balance. So I think I've simplified a lot of things right now. So thank you so much. See you in the next video.